Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
It generally has to flow. We're seeing it do that in energy. Even though oil is probably going to $50, at least temporarily, we see energy being the big winner on the year at this point. So in fact, that's a place where I think maybe some downside put spreads could make sense because you've got extremely high skew. So one of my favorite trades right now is downside put spreads in energy, in areas like gold, which has just persisted higher, but we're seeing unusual skew shaping, meaning those puts are very, very expensive versus calls, which is not something you normally see in gold. So I think there are some interesting plays out there. What did I put on today? I put on downside 1x2 in gold as well to take advantage of that skew. So you're buying one put, you're selling two lower. Now it is a higher margin play because you're technically going to own some gold all the way down, but it gets you in sort of an average around GLD 266, 265, which I think is not bad considering we're up around 286 and it's only a May 2nd play. So we got about a month. So I think that's a nice way to play the downside. You buy that 285. Let me take a look and see what I did here. You buy that 285 put and you sell the lower, but twice as many. So you're selling twice as many to help finance that long put. And that makes the trade kind of interesting. I wouldn't say those kinds of trades are necessarily hedges. So some people say, oh, that's a great hedge. It's not really a hedge. Anything that leaves you short options net is kind of not really a hedge. So I would really hesitate to call it that. But if you can kind of accept that within a range of probability, you're either going to do well on the portion that does hedge a little bit, but worst case scenario, you end up owning the product lower. That's kind of an interesting trade to me, especially if it takes advantage of some of the volatility.
I'm showing you right now the market reaction because it's going to help that gold short. So here is a 2-hour kind of heat map of the key indicators that I watch anyway all day long for clients and show it as well. Here's gold over here, continuous contract, forming a nice little head and shoulder here. Dollar is also dumping. This is very much my theme of money going home. Software is just not moving. They're frozen. The market, however, is not. We have a very solid forced kind of liquidation right now on this uncertainty removed. Now, the interesting thing is gold hasn't sold off, but it is also a collateral trade. So I always watch for that as a sign. When we do start to get selling in the precious metals, that's where we actually get into risk of crash mode. So we can crash from oversold. And when gold starts to reverse lower, that is typically one of my kind of signs. But
it does. It happens. I remember in many crashes, gold will outperform eventually.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here and subscribe to LaDucTrading YouTube channel for more content.